Well, welcome. What we want to do today is enter all of our beginning balances. And for your job for this week, unless you're okay with me, is to input all of your beginning balances as of 7/31. That's last summer. Okay? Just because I want to use some real data of yours and have you have some skin in the game. All right? So if you're the exception, if you okay it through me and you want to put your full-blown business on here, that's okay. But we're going to work out the details together on that one. Okay? So let's, you need to be kind of pragmatic about this, especially when you're first learning it. We might be going a little slow for some of you that have already been introduced to these, to QuickBooks and the whole gamut of accounting. And my apologies for that. Again, if you want to do something a little bit more, if you're curious enough to actually go a little bit farther, I'll work with you. Let's get on to this week's assignment, at least a part of it, and inputting the beginning balances so that we can set up this bookkeeping system correctly. All right. So last week, what I left you with was an account worksheet. And this was just for you. It's not even filled out on this side. All right? But I wanted you to think about it. I wouldn't use this at this point in my career, but if you have never set up an accounting system, then you need to think about this. This is where you would list all your assets and all your liabilities and just think about what kind of an account is it. Is it an asset? Is it a liability? Is it an equity account? And those are ones we're going to deal with in a little while here. So what I mainly want you to do is input the beginning balances for the assets and liabilities. That's what this worksheet was for. You can fill this out very quickly probably, and what I want you to do is actually go back to your balance sheet that I had you fill out earlier in the semester. It's been several weeks ago, but all you have to do is go back to that. If you can't find it on your drive, well, you uploaded it to the assignment. It's still sitting there, and you can use it from there. Okay? So I put some numbers in here, and we could fill out that worksheet from this. I'm not going to do that at this point, but you could do that, and it'd be a great exercise, especially if you're not familiar with setting up a bookkeeping system. All right. So we've got these assets and these liabilities to set up. So the first thing we're going to do is open up our QuickBooks. All right. Now you've noticed this is actually Craig's Design Landscaping Service. Now I did notice, and I'm not laughing at you in particular, and it may seem like it, but I'm just pointing out that sometimes all of us don't actually listen. And that's just the way life is too. But so you're going to miss out on some things. I didn't expect anybody to name their business Craig's Design and Landscaping Services. Okay, I want it to be you, comma Inc. You, comma LLC, because this is yours. Okay, and you can change that later if you're the one, that individual. Okay, it's just between you and me too. So we can chuckle about that and move on. Okay, so how do we set up these account balances? Well, we're going to go to accounting, and then we're going to choose chart of accounts. See your chart of accounts. You notice that actually Craig's has already this big setup, and I did not want you to have any in here to begin with. Some of you may have made some choices. We'll work around that, not to worry. But anyway, we're going to actually build our set. We can take some of these out of here if we have to, although I'm using the test drive again just for examples. And so the first thing I'm going to actually, let's see if I can't do that. Yeah. little delay in the video feed here. I'm just going to go over here to the new, and I'm going to set up a new account. Okay. All right. Here's that new account that we've got. Now I'm going to set up a banking account. It has $10,000 in it to start with. Okay. Now I tell my in-class versions, and sometimes I forget what I tell you compared to what I tell them. But in all honesty, I've looked at thousands and thousands of books, businesses, personal, and that sort of thing, and they don't stick with me. If you're worried about any kind of security issues or anything like that. But the other thing is that if account, when I'm setting up balances in the beginning of a record keeping system, if I have things like 10,000, just nice, beautiful, rounded numbers, I know they're incorrect. Okay, that's code for I know you're lying. Not so much. I mean, they're your books. You're lying to yourself. So if you don't have it to the penny, your ending balance that you're going to input in here, then I know that you're fudging a little bit. Might not be too major, but anyway, you're talking to yourself. So don't lie to yourself. Just put in with the number. Okay. So here we're going to set up a checking account. It's got $10,000 in it. It's going to be a bank account. It defaults actually to bank. And then I'm going to drop down the detail type, and let's see here. There it is. It's a checking account. And I'm going to go, there's already an account in this bookkeeping system called checking. So I'm just going to call it checking number 1. Or actually, so it stays on the top of the list, I'm going to call it 1 checking. All right, so I'm gonna call it that right there. I can make it as a part. Maybe I've got several accounts, and I know that I've encouraged you in the beginning to keep it as simple as possible. Only work out of one account, makes it simple and that sort of thing. But as you develop your business, you may actually have a lot of advantages to having multiple accounts. Okay, so you might have a major account called checking, and then you have Security State Bank checking, you have Capital One checking, and so on and so forth. Okay, so but in this case we're just going to leave it, and we're not going to have a major account to it. Okay, so we're going to put in 10,000, that nice beautiful round number. And then we're going to actually have that as of July 31st. Okay, my statements, and I know some of your statements don't follow a monthly routine. So you're going to, for instance, one of the people in class had their statement actually entered on July 22nd. Well, I said, use that one. And then you're going to come forward with all transactions after that so that your account, we can balance your account and reconcile it later. Okay? So that's all there is to setting up an initial balance for a checking account. So let's not make this video too long. Let's go back to our balance sheet. Let's enter one more. Let's put in, well, this car actually, I'm going to take that out because we've got it below, and that would be considered a fixed asset. But we have 3 calves valued at $4,500. Maybe they're club calves or something like that. Maybe they're yearlings, and they in fact are worth $1,500. Okay, so we've got 3 calves at $4,500. So we're going to build a new account. I know hopefully this doesn't shake up your screen too much, or you're looking on your phone, but this is not a bank account. All right, this would actually be considered it is a marketable livestock asset. So actually it would be an other current asset. So we'll use that one. Okay, then we're going to come down here to detail type. Is it an inventory? Is it, let's see here. I picked the wrong one here. Other current asset, loans, other current asset. I'm just going to duplicate that. Now I'm going to describe it as 3 calves. Okay, it could be a sub-account to all cattle, all marketable cattle if it's a current asset. Okay, balance $4,500, and that's of July 31st. Okay, there we go. Now let's go back to your balance sheet. Let's pick up at least one of our fixed assets. Okay, we've got a car at $12,000. Okay, so we're going to go back to our chart of accounts, pick up a new one. So here we go. It's going to be a fixed asset. And you might have to scroll way down at the bottom as vehicles. And here's where you would name it. All right, $12,000. Maybe it's a Honda. You pick the model. Could be a sub-account. Maybe you own several accounts. If you know me personally, you know that it's the Jones used car lot around my house. All right, just because it's hard to. It's actually impossible to go back in and track depreciation if in fact we decide to do that. We're going to click on track depreciation on an asset like this. So we're going to have the original cost is actually $12,000, the value of it as of July 31st. So we're going to put $12,000 in there as of July 31st. Okay, now if you in fact had some depreciation on that vehicle up to this point, you could actually put that in there. I prefer to actually put the actual book value, which is depreciated value, into it as the starting cost or original cost. Okay, so keep it simple. That's my mantra throughout all of this. So we'll be able to depreciate it from this point on. So save it and close. So let's go back to our balance sheet. And let's put in a couple of these. I'll just put in credit cards at $500 and we have a car loan at $8,000. Okay, let's just put those in there. A new account. Okay, we have a credit card. Let's find credit card. There's a credit card right there. And it is duplicated as a credit card in detail too. Maybe that's our Capital One credit card. Okay, put a description in there if you'd like. The balance was at $500 as of July 31st. Alright, there you go. We've got that one. Let's put in the $8,000 we owe in long-term liabilities. Long-term liabilities. Other long-term liabilities. We can actually have that listed as the long-term. What was that? Was it a Honda? Whatever it was, maybe a little more description. Here's where if we have multiples, that we may choose to put that underneath a a major account of all vehicle loans, for instance. And in a farming or ranching operation, vehicles or equipment or any kind of thing like that that we have a loan on, we might actually want to look at each one of those separately as a sub-account to a major account. So we're going to put $8,000 in there as of July 31st. Save and close it. Okay, I did not enter everything in there. I didn't want this video to be too long, but at this point, the assignment will be, after you've entered everything in there, you can actually pull up your balance sheet and your profit and loss statements, and they're right at the top here. So we've already gone over how to do that, how to choose the print and save as a PDF. So if you need to review any of that, you can go back into last week's lesson and get any information there. All right, so I'll pause here and I'll put up another video on how to actually put up some transactions. All right, thank you.